I sometimes despair for Australians trying to make sense of real estate markets when the standard of analysis and commentary in news media is so poor. Knee-jerk responses to short-term data from economists, journalists, and often from the big-name research houses create a mass of confusing, conflicting, and contradictory commentary. The commentary around price data is the worst example of this. For a long time, the biggest problem for consumers trying to make sense of market events has been commentators putting too much importance on short-term results. Real estate is a slow-moving and long-term business, and data showing 1 month's change in median house prices is meaningless. Yet recently we've had commentators, economists and journalists declaring a downturn in national real estate based on 1 or 2 months of lukewarm figures. And then, with the publication recently of the February price data, suddenly the downturn is declared to be over and the boom is back on. Seriously? The major research organisations have analysts who have been around long enough to know that this is nonsense, and I suspect they just don't care as long as it generates headlines. We have to remember that their motivation is not to inform us or to help us, but to generate cheap publicity. The headline on one press release from a data house on the 3rd of March declared, "Housing downturn reverses in February." Housing downturn? Do we really have a housing downturn recently? And how long has this downturn been underway before it was suddenly reversed in February? Well, 2 months apparently. A 2-month downturn and then a miraculous recovery. You have to wonder, are they really that stupid? And what was the figure that prompted them to declare that the supposed downturn was over? It was a monthly rise of just 0.3%. That's right, folks, a 0.3% increase in the national median price is enough for alleged experts to decide that the downturn we didn't know about is already over. And behind that national figure, 3 of the capital cities recorded zero growth in February. It's perhaps more pertinent to look at what the figures say for the latest quarter. 3 months of data is more meaningful. The key points in the quarterly figures include these. Perth house prices are no longer growing, providing further confirmation that the Perth boom has well and truly passed its peak. Adelaide, Darwin and Brisbane had the best growth amongst the capital cities, but some of the regional markets had the best quarterly growth overall, including Queensland, South Australia and Western Australia. Sydney and Melbourne house prices were down about 1% over the quarter. They both showed small increases in February, but it's too soon to say whether that is a serious recovery. In the unit markets, there was solid quarterly uplift in Brisbane, Adelaide and Perth, and the unit market in Perth is doing better than the house market now, as we predicted. And those 3 key regional markets also, Queensland, Western Australia and South Australia, continue to do well with their unit markets. Now the key message from all this is that 1 month's figures are meaningless. They don't constitute a trend that is worthy of major headlines. But that won't stop news media from telling us that the fictional downturn is over.